Palantir Technologies just hit a significant milestone, with its stock soaring more than threefold year-to-date. Riding the wave of the generative artificial intelligence trend, Palantir's latest quarterly earnings release catapulted its shares to a new 52-week high. However, behind the success lies a story of insider selling, notably Peter Thiel's venture capital fund shedding $48 million in Palantir stock. And that's not all. A controversial £330 million NHS contract adds a layer of complexity. Is Palantir's trajectory as smooth as it seems? Let's dive into the numbers and controversies to decipher the full picture. The recent surge in Palantir stock has been nothing short of impressive, capturing the attention of investors and analysts. Bolstered by the excitement surrounding the generative AI trend, Palantir Technologies has become a focal point in the tech landscape. This surge reached its pinnacle after the release of Palantir's latest quarterly earnings, which proved to be a game-changer for the company's valuation. The impact of the generative AI trend cannot be overstated, as it continues to fuel anticipation and enthusiasm in the market. Palantir's strategic positioning within this trend has contributed significantly to the surge in its stock value. The latest quarterly earnings release served as a catalyst, providing tangible evidence of the company's prowess in navigating the evolving AI landscape. Year-to-date, Palantir stock has experienced an outstanding performance, with its price hovering around $20. In addition to its surging stock performance, Palantir's success story extends to robust private sector sales, fueled by the insatiable demand for AI-related solutions. The company has positioned itself as a powerhouse in providing AI and machine learning analytic software to clients across various industries, showcasing its adaptability and relevance in the rapidly evolving tech landscape. While private sector sales soar, Palantir faces challenges in its public sector ventures. Despite falling short in the last quarter, there's an optimistic outlook on potential growth in this segment. The company's resilience and ability to pivot indicate that public sector sales could soon experience a resurgence, aligning with the broader trend of increased AI adoption across government entities. Palantir's strategic focus on growth, prioritizing market share over short-term earnings maximization, is a noteworthy aspect of its business philosophy. This approach signals to investors that the company is positioning itself for long-term success, emphasizing the importance of establishing a strong foothold in the AI market. Palantir Technologies also drew attention for its premium valuation, currently trading at around 80 times forward earnings. This valuation, while seemingly rich, reflects the market's confidence in the company's potential within the AI sector. Investors are closely watching as Palantir's stock continues to command a premium, a testament to the perceived value in its AI and machine learning analytics software. However, a recent development raised eyebrows: insider selling, particularly from Peter Thiel's venture capital fund, Mithril LP, which sold $48 million worth of Palantir stock. Some investors expressed concerns, questioning whether Thiel's move is indicative of insiders cashing out while the company's stock is riding high. To provide context, Thiel's substantial ownership of nearly 120 million shares adds a layer of complexity, suggesting that this sale may be a strategic move rather than a bearish indicator. Taking a long-term investment perspective, it's essential to recognize that Mithril LP's investment in Palantir dates back over a decade. It's not uncommon for venture capital firms to realize gains on their investments, especially after such a prolonged period. But what's really making waves is Palantir bagging a massive £330 million contract with the NHS. This 7-year deal involves Palantir providing a federated data platform, or FDP, aiming to connect IT systems across health and social care trusts in England. On the surface, it promises improved care, reduced waiting times, and enhanced efficiency by linking patient records seamlessly. However, this move hasn't been without its share of skepticism. Concerns about patient privacy and potential data exploitation have surfaced. Critics fear that Palantir's close ties with intelligence agencies and military organizations worldwide might compromise the confidentiality of personal medical details. Delving into Palantir's history adds another layer to the NHS deal. Co-founder Peter Thiel's controversial stance on the NHS, where he labeled it as making people sick and advocated for its overhaul, raises concerns. Despite Palantir's CEO Alex Karp disagreeing with Thiel's comments, they linger as a backdrop to the NHS contract. To navigate this complex terrain, Palantir is not alone. Accenture, PwC, Carnel Ferrar, and NHS not-for-profit NECS have joined forces in supporting Palantir in this NHS venture. These consultancy firms bring their expertise to the table, attempting to address concerns and ensure that the FDP operates within ethical and legal boundaries. But before we continue, we just want to thank you for watching this far. Moreover, there are growing concerns echoing from various quarters, with the British Medical Association or BMA labeling the £330 million Palantir NHS contract as deeply worrying. The BMA emphasizes that patient information may be at risk and urges a closer examination of how confidential data will be used within Palantir's data platform. Amnesty International, a prominent human rights organization, has weighed in on the matter, expressing unease over Palantir's involvement due to its history of human rights controversies. The organization insists that any entity linked to serious human rights abuses, as Amnesty claims is the case with Palantir, should face exclusion from public procurement on grounds of grave professional misconduct. Adding to the concerns, groups like Foxglove are poised to launch potential legal challenges. Foxglove is particularly vigilant about patients' rights to opt out of data sharing through the federated data platform. This impending legal action adds a layer of complexity to the already contentious landscape surrounding Palantir's NHS venture. Now the NHS steps up to defend its monumental £330 million contract with Palantir, highlighting a commitment to data security and patient privacy. NHS England asserts that no company involved in the federated data platform, including Palantir, can access health and care data without explicit permission from the NHS. To address concerns about patient data, NHS England emphasizes that all data within the platform is under the control of the NHS. The platform will employ privacy-enhancing technology, ensuring the highest standards of security to protect sensitive medical information. However, the controversy around patient opt-out rights continues to loom. NHS England asserts that patients won't be allowed to opt out due to the anonymization of data before sharing and the exclusive use for direct patient care. This response aims to assuage fears and aligns with NHS England's commitment to maintaining the highest standards of data security and ethical data usage. Furthermore, Palantir's financial prowess continues to make headlines, marking Q4 2023 as a significant milestone with its fourth straight quarterly profit. CEO Alex Karp proudly stated that this profit is the most significant in the company's 20-year history, propelling Palantir into the spotlight and making it eligible for potential inclusion in the prestigious S&P 500. The surge in Palantir's stock price, soaring nearly 20%, reflects the market's enthusiasm for the company's data analytics services. This surge is not just about numbers, it's about anticipation of Palantir's potential inclusion in the S&P 500, a move that historically triggers a surge in demand for shares. Looking ahead, Palantir expects revenue in the fourth quarter to range between $599 million and $603 million, with the midpoint surpassing analysts' estimates. The positive signs are not confined to financial figures. Palantir's AI platform, showcased through recent bootcamps for clients, has seen remarkable interest, nearly tripling its user base in the July-September period. However, amidst this success, there are signs of slowing growth in Palantir's government-focused business, with a 12% growth in revenue from government clients falling below estimates. Palantir attributes this to budgeting constraints at the government level, but remains optimistic about demand, especially considering geopolitical tensions. The stock's ability to maintain gains hinges on Palantir showcasing differentiated generative AI technology. RBC Capital Markets analyst Rishi Jaluria points out that sustained stock gains require Palantir to stand out in the competitive landscape with cutting-edge AI technology. So, do you think will Palantir's differentiated AI offerings propel it to new heights? Drop your thoughts in the comment section down below. Moreover, if you're curious about Palantir's recent strides, simply tap on this video link. Appreciate you joining us, and keep an eye out for more thrilling content coming your way.